Good afternoon, everyone. Welcome to the big one. Welcome to Non-Farm Friday. This is what we've been waiting for. This is what the week's action has been gearing up towards. As you all know, it's 1:30 p.m. today. In 1.5 hours time, just under, we have all the action coming from Non-Farm. Until then, I recommend it will be quite light on the data front. I just want to know if you can hear me clearly. And if you can you see my screens? Please type Y. If they're mostly Ys, I'm going to crack on, I'm afraid. Okay. Alright, good job. So let's go. Sorry to inundate you with charts here. There's a couple of stuff I wanted to go through to start off with. Well, first of all, let's have a look at the longer term E-mini S&P chart. I'm going to pull this one out, and for those of you that have been perhaps paying at least some attention to me over the last few days, I've been looking at a range that we've been involved with in the whole of August, and the whole of August normally can be quite a quiet month, a rangy month without a huge amount happening, and certainly if I take this chart back to the 2nd of August, we are confirmed in this range. Very sideways range, oscillating really around the 1200 figure. Not a huge amount of direction, and yesterday was no different. But overall, I mean, it's quite interesting to have this lack of continuous momentum over a week where we had so much economic data. What have we had? Well, on Monday we had ISM Manufacturing Index. That was at 55.5 when the expected was 54, so we had good data on that Monday, the 2nd of August. Then on Tuesday we had factory orders, and that was slightly negative, -1.2 versus 0.5. On Wednesday we had ADP unemployment, as you guys will remember, and that's 42,000. We also had ISM non-manufacturing, came in better than expected again at 54.3. On Thursday we had some negative data. That was really the first major negative data of the bunch. As you guys know, that was initial jobless claims, which were down by 11,000 to 457,000. But the number before was revised up to 68 from 64, and that's what weighed on the initial reaction, and also the continuing claims were up to 81, a total of 4.565 million. So slightly negative coming out on the initial jobless or the continuing jobless front yesterday. We're not attributing too much to that negative data, however. On a monthly view, if you look at it over a 4-week period, you see that at the start of June, the initial was 472, and now it's 479, so it really hasn't moved, and the continuing claims is slightly lower on a monthly view. But now that we've had all of the, well, let's say the majority of the corporate earnings, now that the earnings season is all but finished, really, all eyes are going to be on jobs, and it's all about jobs for the US economy, which is why this number has so much importance and so much anticipation. So yesterday, overall, you can see the move down in the stock market in the E-mini S&P here after that initial jobless claims data. We did then grind higher though, and spent the rest of the session grinding higher in the face of that bad data, which is, you'd say, you know, reflects positive sentiment. We also had interest rate announcements from the UK and the ECB. Absolutely no surprises there, guys, as you'd expect. And I hate to say it, I can't even remember Jean-Claude Trichet's press conference. It was so dull. I know it was on, but the likelihood of him actually saying anything interesting being so low. So that's the E-mini S&P. You can see the box and the range that I'm involved with there. Sideways, all eyes on today. All eyes on jobs. Okay, so what else is going on? Well, yesterday, I don't know if you remember also me talking about the Bund. Really interesting move in government debt. I've got my long-term daily chart here on the Bund, and we're back at the peak. We're back at these all-time high levels, which incidentally are much higher than where we were at the height of the credit crunch, but about as high as when Greece had its sovereign debt problems, and when Spain had their problems, and there was a huge fear of contagion across the European Union. The Bund pricing in that kind of eventuality, whether it's that or just general fear in the market. It's interesting to see. There's definitely a divergence of views here between the stock indices and government debt. If we look at the Bund on a slightly shorter term chart, so this is the 11 minute, I'll change that to the 30. Actually, I'll change it to hourly. you can see the trend that we've seen for government debt in August, and it really is one way, 128.10 all the way up to 129.76 last night. Really impressive move in government debt. Just want to keep your eye on there, the correlation between debt and indices definitely having changed in the short term. So looking ahead, guys, what have we had today? Well, we've had Italian industrial production that came out month-to-month 0.6 versus 0.7, so a slight disappointment. UK and Germany had good production news, but the market's not really caring one jot, with obviously all eyes on the non-farm figure. We had some interesting movement in oil, actually. Have a look at this 5-minute chart in oil, and we're below our entry level now of 81.90. Just when I was coming in this morning, shortly after 7, you saw oil have that spike from 82.22 to 82.68. Now, obviously all our eyes are on non-farm at the moment, but yesterday you saw a huge amount of correlation between movements in the oil price and movements in the E-mini. So do keep an eye on your oil chart. We had that rally higher and have since sold off below our entry level at 81.91. So, non-farm payrolls, what's going on? What do we predict? This is the big one. We're predicting an overall figure, a total headline figure of minus 32, okay, minus 32, and just to put that into perspective, this is actually quite bullish. I wonder if I can put in the room here. I'm going to put in the other analyst forecasts. Okay guys, so you've got Citibank at minus 50, Credit Suisse minus 50, so both of those more negative than ours. Goldman Sachs minus 75, Nomura minus 90, UBS minus 55. So the only positive one, DBK, we are, I would say, at the upper end of that forecast, and the reason is we've got a more bullish forecast of 118 private sector jobs. Now, as you know from last month's non-farm payrolls, all eyes are on the private sector jobs. No one really is interested in what's going on in the public sector hiring and firing, as that has been distorted by the census. You have to be careful here. It has been distorted. Jobs are still being lost, but it's not at the rate that has a significant effect for the long-term economy. Can I just check, guys, one more check if you can hear me, please type Y. Okay, so why are we more bullish? Why do we reckon 118 private sector jobs have been created? Well, it goes back to this week's data actually. So for example, if you look back at Monday's ISM, the employment component was better than expected. If you look back at Wednesday's non-manufacturing ISM, we also had a better employment component. Combined with that, Wednesday's figure of ADP was also to the upside, and I think in the short term these weekly indicators give us a more aggressive, a more optimistic outlook for the private sector jobs of plus 118. And I think if the figure does come out at minus 32, that's roughly half consensus at minus 70, or just over half even. We will get a move to the upside. Can we break this August range that we've been in so far? I would absolutely dearly love to see that. I'd love to see us stay above the level of 1130 and continue a momentum trend. Okay, so if it's minus 32, if it's got a private sector employment of 118, this is still good news. It still means the economy is getting better, but it's by no means getting better at any type of rapid pace. There's a kind of divergence in the US at the moment. It's good news if you're lucky to have a job, because the hours actually worked, and if you look at this component of the non-farms data, it will go into the number of hours worked. The hours worked are going up. Okay, so if you've got a job, you're actually probably likely to be better off than you were before you had that job. The problem is, if you are without the job, if you're on the outside of the loop, then it's obviously a dire situation. There's an interesting stat. The majority of actually, let me just put that in the room about the hours worked. You can see it there. There's an interesting stat about the level of the long-term unemployment in the US. Okay, the